Okay, so I've been asked about the Scottish Widows Sharia pension CS1 and if that's in somebody's pension fund. Well, let me just highlight just things you might want to keep an eye on. It is tech concentrated, okay? Now, you could buy these yourselves. You just go to a broker like a Barclays, open a SIP or an ISA. You don't have to open a SIP or an ISA. You can own them directly, and those are they. There's several things you're going to have to be careful about. Whilst these stocks, it's these stocks, not the fund, it's these stocks have had a good run, which is great. What about going in the future? So I'm going to address that, but I'm also going to address this point. They've also got minuscule amounts in Australian equities, Taiwanese, French, Chinese, and so on, which just seems a complete waste of time because the proportion of their portfolio that's in those is going to make negligible difference to the overall performance. Okay, the impact's going to be minimal. So the top 10 holdings pretty much gives you a fairly good idea. Let alone if you've got 1% in Taiwanese equities, how much have you got in any individual Taiwanese stock? Okay, so limited diversification is a problem because it invests only in equities that comply with Islamic principles. That limits diversification across asset classes within the actual individual equities. All of these apparently are fine. They comply with Sharia, including the oil company, including anything and everything Elon Musk presumably has ever said, including whatever this pharmaceutical company is doing, and whatever Microsoft is doing to the environment, and whatever all the people using, say, Alphabet and Google search engines search upon, all fine. So I assume that when it says complies with these principles, it's pretty broad brush and it just excludes gambling and alcohol. So to some extent you might be fine with the diversification. Performance volatility, well, they're significantly invested in technology companies, as you can see. They can't go into cash. They can go into other equities, but they can't go into cash. You can go into cash if you held these yourselves. So again, something of a concern when there is a market turn down like now. Whilst there are some sector constraints, alcohol, gambling, and conventional financial services, they're excluded. Well, financial services are doing rather well at the moment in terms of valuation. Goldman Sachs, for instance, Bank of America, and so on. So you might be worried it's leaving some companies out, but you might think, there's ample choice as well. Sharia compliant funds also incur higher costs due to the need for continuous screening and monitoring of investments to ensure compliance with Islamic principles. You might again say, well, I'm not too worried about that. Liquidity issues. Some of the underlying assets in the fund may be less liquid than those in conventional funds. Again, it doesn't look like any of the top 10 holdings are, so again, might not be something that you're too worried about either. So what about some other problems? Well, as I said, performance volatility, given the concentration in tech, which I don't have a problem with personally if I own it myself. It's just when others are doing it for me, I think, well, what are you going to move into now as well? And it might be that the best is behind them. I'm not necessarily saying the best is behind Microsoft, Apple, Nvidia, Alphabet, and so on. But if it is, then what for the fund? So I'd say just keep a close eye on these kind of investments, and if you're not confident about doing it yourself, which is perfectly fine, your alternative is to keep where you are, or an S&P 500 tracker, which tracks the Standard & Poor's, the 500 largest American companies, if you're not particularly concerned about being Sharia compliant either. Okay, and historic performance is not necessarily a guarantee of the future. They've done well in the past, not because of the fund manager, but because they were in these companies. Okay, it's those companies that have done well. Well, a lot of people, including myself, were in most of these companies as well, directly without any middleman. Like I said, you might not want to do that yourself, which is understandable, in which case you might want an index tracker, or you might just stay where you are as well. Have a look at the links in the bio if you want to learn more about investing. Have a look at my free campaign for $1million.com, which will teach you a bit more about investing as well. Summertime's a good time to learn and sort out your pensions as well, at least be well informed and well educated. So thank you for the message, and yes, thank you.